words, how would you describe how things have panned out so far this year?
I think eventful is correct, actually. Okay. We've seen quite a bit of activity from corporates in the FI space as well as the real sector, raising funding this year in the bond markets. And just to give you some idea of the scale, if you look at bond issuances in 2018, we had about 125 billion of new money raised compared to 28 billion of last year. That's a
just
whooping,
28 billion last year?
Yeah, 350% uptick in that. And if you look at the commercial paper space, so that's more the short end of the curve, we had 232 billion being raised compared to 169 billion last year, about 37%. So clearly the market was favorable. We had seen sustained periods of high liquidity in the second and third quarters of the year. Rates had started to go down, and that favored borrowers, and that's what also resulted in a number of them looking at raising long-term money. That's worked very well up until more recently, where we've seen the rates starting to reverse. So it's been a good year, 2018, and we are hopeful that we'll see more of that come next year as well.
Because next year, everybody keeps telling me next year is an election year. That could be a game changer in terms of how early things pick up in a year in terms of financial activities. So, I mean, obviously this was a good year, but just looking at how things could play out next year, is it true that we may not see activities until the first half of next year?
Yeah, I mean, if you were to look at history as an indicator of what might happen in the future, we saw in 2016 a similar sort of trend, 2015, 2016. After the election, it took a while for things to pick up again. And it actually took quite a while. But after that, we saw a bit of activity. It's anybody's guess what would happen between now and the election, and then maybe shortly after. But what is changed in the market is I think there's a sense of, from the borrower's perspective, corporates, this is a real alternative for them as opposed to just raising money from banks. So there's just a rethink from CFOs and treasurers in terms of how they raise money.
Interesting. But I know that it wasn't all nice and smooth. What about the challenges? What challenges are the issuers themselves and investors that they face this year?
I think if you spoke to a CFO or a treasurer and said, what's top of mind for you, what do you worry about in terms of your funding strategy? For those that use the capital markets, it still takes too long to get a deal done. I mean, it could take you about 6 months on average. And there's a lot that has been done to address that, from the regulatory side.
Why is that in the first place? Why does it take that long?
It's a myriad of issues, sort of extended. The paperwork that you have to go through, etc. But there's been a lot of work done between the industry participants and the SEC to try to work around ways in which you could speed that up.
So, but do we know if we're making progress? And
we have made a lot of progress.
A difference based on that progress in 2019?
It's gradual, I guess is the best way to describe it. We have made progress, and that didn't happen overnight. It took a while, but we have seen substantial progress, and we believe that if we continue along the same path, we will see even more progress in terms of trying to make the process more efficient for the benefit of all.
But still on reforms, what other reforms you think that the market is in dire need of that perhaps it's been brought to the attention of the regulator, the SEC, that they're aware of and are also looking to resolve as well?
Well, some of those reforms will actually it has to do with the structure of the market. So today, most of the investors will tell you that if they invest in a corporate instrument, it does not benefit from the level of liquidity that they see compared to a federal government bond. For that to happen, you must see a lot more sort of bond traders willing to trade in the secondary market. If that begins to happen, and I think that would change the sort of picture around liquidity for secondary market trading for investors. That would also mean that the pricing should come down for corporate issuers, because that liquidity premium which investors attribute to illiquidity would have to go down. So there's that, that needs to happen. Other things, from an investor's perspective, the information, ability to access information. So most of them will tell you that after an issuer comes to market, in the aftermath, it may be difficult if you're not a listed company to have information on them. so you can continue to monitor it. Now that is also starting to change because a number of companies, they take the initiative to engage in roadshows with investors and ensure that they keep them informed about their prospects. Then there's also changes with regulation, things like IFRS 9. So for pension funds, now they have to mark their portfolio to market, and that has an impact in terms of how they view pricing. Once the market understands that a bit better, I think that that should also improve in terms of how the investors look at pricing.
Absolutely. So last question, for your outlook for 2019, what should we expect? I mean, I know we've talked about the fact that things may not pick up until half year, until the election dust settles and all of that. But based on this year, maybe some things that you think could happen or be extended into 2019. What comes to mind for you?
Yeah, so I think we spoke about how people, the CFOs are having a rethink about financing. So it's not likely that if there's a lag in terms of the pickup, it will be prolonged. I think people would, as soon as we have some clarity on the way forward, they will just go back to their business as usual and then look at ways in which they have to raise financing, which increasingly includes the capital markets. Beyond that, I think there are a number of new products, new ideas that are being tested. Before, all we used to have were sort of plain vanilla bonds. Now, corporate treasurers, they look at the short end as well as the long end. We've talked about green bonds financing. A number of infrastructure companies are looking at that now. And then other ideas, like Sukuk, which would also become mainstream.
We also saw that, I think, the savings bond also.
Yes, okay. Yes. And all of that is also, I think, from the government's perspective, trying to inculcate a culture of savings and investments in the populace. And I think that will bode well.
I must thank you for your time today. Thank you so much for being on the
show
today.
Esther.
Kobby Bentsi-Enchill, Executive Director and Head Debt Capital Market at Stanbic IBTC